Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, February 29th, 2012 is sponsored by RealTick. All right, let's get right into the mix, guys. Again, the key is to look at the market indexes, which are basically flat on the day. Then the other side of the coin is to actually look at what's going on intraday. And that's where you see a major divergence here. We've had crazy volatility in this market during the day in gold, in silver, in oil, and in the markets themselves. But if you look at the indexes right now, you're basically on the flat line. Dow is up 5 points. NASDAQ down 1 point. S&P's up about 3/4 of 1 point. So again, a very flat market, but look at your intraday action here on the SPY. Let's start at the very beginning. Today we got some better than expected GDP numbers. They really had no impact on the futures pre-market. Why not? Because essentially the markets are so overbought, it's going to take more than a little better than expected GDP number to continue to flush this market higher. Markets, regardless, open slightly higher and get a small bid up. This was on the back of a 13,000 close on the Dow. And one thing I explained to my members here is this. When the Dow closed above 13,000 yesterday, the media went crazy, pumping it, throwing parties. Any radio station you were listening to, CNBC, Bloomberg, whatever it was, 13,000. 13,000 is all you heard. Now, what that does is it coaxes the little amateur retail investor in the market. So this morning, you had a lot of amateurs calling their broker saying, hey, get me in this market. I don't want to miss the train, essentially getting greedy, thinking they got to be in this market to make money. And that's why you saw this light volume early morning push up. Now, we all know as the small investor gets involved in the market, that's usually the end of the run or very close to the end of the run. And sure enough, by 10 o'clock, we see a pretty massive reversal. The dollar all of a sudden gets a massive spike. The 10-year also saw a massive spike as well. And as that spiked up, gold collapsed, silver collapsed, and the markets collapsed. And this was an epic collapse, folks. Look at this drop all the way back down from this high pivot all the way to the low of the 200 moving average. 200 moving average turned out to be an amazing buying opportunity. Volume has gone very light again. Things are calm again in the markets, and the spiders have floated back up. And we're back basically to the positive side on the SPY, up 12 cents on the day. This red line right here is an epic line. I can't go into what it means, whether we close above or below today, but our members here at In the Money Stocks know exactly how important it is. And again, it's very interesting as we're coming into a key cycle turn date for our members in this market to understand what this means in relation to that cycle date and understanding exactly what to do. I pulled the trigger on another short today, folks. I'm already up sizably on that play. Again, members who took that play already up $5. Yes, I repeat, $5 on that short just from an intraday perspective of shorting it this morning and again where it's currently trading. And again, I can't reveal what stock that is that we went short today, but if you did, you are in the money already. $5. Talk about an awesome trade right there. In addition, the stock I shorted a couple days ago, in the money, about $1.50 already on that one. And the key is, even though the market's been floating up, if you know the levels to go short or go long and you know the master calculations, you can literally pinpoint the levels regardless of what the market's doing and you'll make money. Now, obviously, if the market goes in the same direction, you're going to make even more money. But the point is a level, not to be trifled with. And again, folks, just for those of you that are just watching this video, don't forget, 7-day free trial. That's right, 7 days free at InTheMoneyStocks.com. The key is to understand which service you want to be involved in. The Research Center 7-day free trial is more geared towards swing traders, those of you that are investors, 401k people, people that are wanting to hold stocks for a couple days to weeks to months. That's where you want to go. If you're more of a day trader, if you want live analysis intraday, if you want to see my charts live during the day, hear me talk about the markets, give out trade alerts and so forth on an intraday basis, the Intraday Stock Chat 7-day free trial is for you. And again, 7 days, no obligation. As long as you cancel before the end of the free trial, you're not charged. Very simple to do so. There's a button when you log in under your account's edit subscription. Click it. You're done if you don't want to stay with us. But bottom line is, our members here, free trial members, end up making so much money on that free trial that they're going to stick with us anyways. You'll see. All right, go try it out. All right, going back to the markets. Markets pulling off this red line. I just said to you guys how important that red line is. Look at how the market retraces back down a little bit. I'm going to be watching this line towards the end of the day. All right, what else do we have going on here, folks? What else is moving in this market? Obviously, I think we need to touch on gold. Look at the collapse on gold today. This is an unbelievable collapse. You're talking about the GLD down about 5%, 4%, somewhere in that vicinity. It is a monster drop. You don't see drops like this very often. Look at your daily chart. And again, amazing how you pierce these blue lines, kiss this upper line, and then just collapse today going down. Look at this support area right here. That's your big support right there, and you've gotten a little bit of a bounce off of that. Wouldn't be surprised to see gold go all the way down to these moving averages. I would not be that surprised. All right, and silver, same thing. The SLV getting pounded today, down about $2. Broke out above this little range, and then just came right back into that range today. And again, the interesting thing about it, look at this level right here from this gap right there. And look at the high pivot today, right to that exact print, and then collapsing down. This is the SLV, the silver ETF. So again, commodities got crushed today. Why did commodities get crushed? Well, obviously they were overbought. If you look at the SLV went from about 25 bucks all the way to a high today of 36, and that's in 2 months. Think about that. You're talking about, what is that, 40%? 40% incline on silver prices in a matter of 2 months. Ridiculous. If you go to the GLD, same general synopsis here, from the low of around 148 on the GLD to a high yesterday of 174. Think about that move up and how overbought that is. And then all it takes is a little bit of a shock from the dollar spiking, and people just run for the hills on the commodities. And taking a look at the dollar, I'm going to show you exactly what we're talking about. Look at this move up today in the UUP, which is the dollar ETF. This was the spike that started the collapse on the metals. This massive spike. And this is a huge, I mean, remember, we're talking about the dollar here. We're talking about currencies. Very rare for currencies to get this type of spike up. More so likely on the downside as we have the intervention by the ECB, European Central Bank, the Federal Reserve. They just want the dollar to go down and down because it ultimately helps the global economies and everything. But bottom line is you can't go down forever, and you're seeing today a reversal. The dollar is trading up very strongly today, and this was the mega spike that really killed the commodities, gold and silver today. All right. Now, I want to go over a couple other charts today. What else do we want to look at? We have to look at Apple. I mean, anyone who doesn't take a look at Apple is kind of avoiding one of the main things in the market. Apple today could be a little bit of a doji here, interestingly enough. Something I'm going to just keep an eye on. But bottom line is we have a key trigger level out there for our members. If you want to get that, join the Research Center. 7-day free trial. I mean, I don't need to say it again to you guys. But bottom line is we put out a trade alert on this. When it hits that level, it will be a short because it's a master level. You want to get involved? You want to make money on Apple short? We know when to short it. We'll tell you. Just take that 7-day free trial, just like the other plays out there. All right? And again, very nice day, up about $8.50, although it is $4 off the highs of the day on Apple. Google having a decent day, up $2.70. Google breaking out yesterday and is continuing to climb, although it's off the highs of the day. If Google continues to go up, the shorting level I like, and I'll give this one right to you guys as a pro bono one, this is your level. If you get to around $640, it's a dead-on short, a beautiful short. Until then, I wouldn't mess around with it. If it pulls back, who cares? If it goes a little higher, until it gets to that level, I don't really care. I'm not looking to go long. I'm not looking to go short at this particular time until it hits this level, and then I pull the trigger on the short side. All right, and again, discipline is number one here at trading at InTheMoneyStocks.com. Whether you're a swing trader, investor, or day trader, if you have discipline, patience, and you know the methodology, the proprietary methodology of InTheMoneyStocks.com, you will be guided and profit for life. That's simple. All right, now let's take a look at a couple other stocks out there. ExxonMobil's down about 38 cents. Chevron, interesting on Chevron because it basically got to a double top up here. Look at this double top today hit, and then nice reversal on the daily chart off a double top, pivot high resistance level, and again, very nice pullback. A couple other charts we want to take a look at of main stocks. JP Morgan Chase. JPM is one of the reasons why the market's hanging in there today with a nice little gain, or at least a flat line here on the Dow and S&P. The reason, again, JPM about 47 cents. So financials are actually stronger today overall. You have Goldman down, but a lot of the financials are hanging in there like JPM. What else do we have on my watch list? Microsoft down 11 cents. Intel down 18 cents. Amazon's getting hammered today. Amazon went right into resistance yesterday. Let me just show you this chart. This is one I've been talking about to you guys quite often. Amazon rallied up right into this necktie-ish type area here on the two moving averages of resistance and reversing. The key is to just continue to watch this trend line. When this trend line breaks, you will see this stock go all the way down to a double bottom here when you get below this blue trend line on a closing basis. Alrighty, guys. Honestly, I got to go back and make some money here. Spiders, again, beautiful pullback off the red line. This is going to be the key level to me. This one right here. And this is at around 137.70, 170 area. Do we close above or below? And I think that dictates ultimately where we go in the next couple days. All right, again, I got to get back to trading, make some money. I encourage you to come join us here at InTheMoneyStocks.com. Get over here now, take the 7-day free trial, and again, profit for life. Take care, guys.